Good afternoon, esteemed traders and investors. Today is Tuesday, November 25th. I present to your attention another market review for Forex. As always, I'm glad to be here with you today. Today is Tuesday. We have Germany's GDP, and at 1630, US PCE numbers, the core index and retail sales volume. At 1600, there's the index, and at 1800, the consumer confidence index and pending home sales index are released. I don't get why all these news releases are scheduled at the same second, so it'll be an exciting evening for the dollar. Take a look at what we can trade on the charts. So let's start with gold quotes, which held the long break that I mentioned to you at the psychological level of $4,000 per troy ounce. And the instrument is putting pressure on the trend resistance, which it can now objectively be outlined by 3 points, and we can expect a breakout to the upside. Let me remind those who are currently holding long positions that the nearest and most logical spot to add to your position or to manage your ongoing long trades is the long break that formed today. Well, not today, but actually earlier this week. More specifically at the end of last week. Accordingly, if you haven't bought gold yet, you can do so a bit below the current quotes, with a stop just below last week's low. This strategy allows you to enter at a more favorable price while also managing your risk in a prudent manner, ensuring your stop loss is placed in a logical position relative to recent price action. The growth potential, naturally, is up to the renewal of historical highs. That's the main target, but as usual, I think it might also move through the nearest extremes. Just a reminder, trend-following instruments like gold don't reverse in a single move. And for those who think that prices at 4,367 and above are the limit, then I think you're mistaken, my friends. As for the euro-dollar pair, yesterday I gave a trading idea for both a decline and a rise at the same time. Strange, but that's the analysis. The thing is, yesterday the instrument didn't break Friday's high, thus forming a double top, which is a trap for sellers. From the pullback to the nearest long and the breakdown, which is in this zone, you can naturally try to catch longs with the goal of updating this level. Naturally, the instrument will fly up to the nearest resistance level here, from where you can already start looking for short positions according to this scheme. Accordingly, the plan for a decline is present in our second scenario. We wait for a breakout, a liquidity grab, and a move in the opposite direction. Today's news on the dollar may contribute to this. As for the British pound-dollar pair, today the pound-dollar is fiercely testing the short breakdown zone that occurred on November 19th. Thank you. By the way, the instrument has left a lot of levels here, and there are plenty of areas below for it to fall to. But in this zone where it shot up, and as I mentioned yesterday, if you sell here, your stop will be very large, around 600 to 700 or even up to 1,000 points, which is quite a lot, friends. I understand that the profit could be up to 1,500, but still, a 1.5 to 1 ratio isn't much. Accordingly, in this zone, for this not-so-technical instrument, you can look for reversals on the lower time frames. The Australian dollar has also paused its decline. I remind you that despite the weekly setups, not all targets below have been reached, so you can wait for better prices to sell. One of these prices is a bit above the current quotes, at around 0.64860. It would be good to sell here with a clear stop behind the initiative bar and a take profit at the update of the monthly extremes.
Looking for real trading advantages? Forex offers the lowest spreads and commissions. On major currency pairs, our conditions are better. Lower spreads and only $5 commission instead of $7. That's real savings for every trader. And now, let's get back to the market review.
US dollar, Canadian dollar continues its growth and hasn't given us good prices to buy. It's a very risky place to sell because if you get stopped out, you'll be selling and putting your stop behind the weekly time frame and you'll get taken out easily. That's because for this instrument, the weekly setup for US dollar strengthening is quite clear with bullish engulfing patterns in the uptrend. US dollar, Japanese yen worked out beautifully, by the way, the three-wave structure I showed yesterday. Here, the stop-to-profit ratio was about 700 to 900, roughly 1 to 1. The third wave closed here. Congratulations to everyone who participated. As for oil, oil is behaving very nervously, with constant news coming in that American fighter jets are already circling around Venezuela. Let me remind you, there's quite a lot of oil there. And I have a feeling that the reason isn't about drug cartels at all, but about this whole mess. Meanwhile, oil prices are at 58, and if they strike at Venezuela's oil capabilities, I truly and honestly think it will be a genuinely real long-term opportunity rocket. Let me just remind you, especially for those who may have forgotten about the significant bombing of Iran, that oil prices actually rose from 63 to 76 in literally just one single day. The same thing could happen here, as an option. And what we see now, such a sluggish downward trend, is confirmation of this. Option A2. Either there will be no war and prices will fall, or there will be war and prices will rise. The question of risks. Are you ready to risk about $1, maybe $1.50 in order to earn 10? I think the answer is obvious. As your speaker predicted, my dear friends, as anticipated indeed. Bitcoin prices have recently started to rise significantly. This is logical because the asset had dropped. First of all, it is trading below the psychological mark of $100,000. Secondly, the $80,000 mark. That's just a price that sounds sweet to investors' ears. Buy at 80 to sell at least 100,000. Even without leverage, my friends, that's 20%. A profit zone, an objective reversal area, and those who listened to me yesterday have already made some money. By the way, yesterday we tested the long breakdown zone from 86 to 80, actually 99.0, and those lucky ones have already earned money.
I also want to remind you that every Forex client automatically receives loss insurance. For every $1 of compensation, only $4 of your friend's investments are required. Just submit a request, and your losses will be recovered. Let's continue with the review.
The American stock market is rising from the ashes you drove it into. As for the five-wave structure, I don't see any real super opportunities to buy just yet. Let me remind you that in the American stock indices, I'm not interested in a drop of more than 15 to 20%. Only then does it make sense to invest money here. All other price increases, from an investment perspective, are not interesting here. As for the dollar franc, that's an instrument that has long attracted my traders' attention, and last week gave a gorgeous engulfing pattern on the weekly chart. And there is a very big potential for this instrument to grow, somewhere around 12,000 points. Even if you get stopped out based on last week, that's a 10-to-1 ratio, and that's quite a big profit, which I think can only be closed out next year. The Canadian dollar/Swiss franc pair continues to interest me for grid trading strategies. Despite the strengthening of the US dollar, the Canadian dollar is linked to it and they are correlated. Naturally, if the US dollar strengthens, the Canadian dollar also strengthens. But I am specifically expecting a crash of the franc because I see through many instruments, including this one, a huge move of about 7,000 points from the current prices. Let me remind you that this instrument is not the most volatile, and my friends, that's a lot. What we see now is that the instrument has already, let's say, formed a base, which some will consider a breakout. I believe you can set limit orders for a breakout on this instrument, aiming for much higher quotes, or if there's a pullback after the impulse, you need to buy and capture this entire move. Audi CAD, this instrument has gone flat, it formed a base at the bottom. I expect a breakout from this base. There's plenty of liquidity above. In grid trading, capture liquidity. Place limit sell orders with steps of 500 points.
With Forex, you can triple your profit. For every $4 of your friend's investments, you automatically get an extra $1 added to your profit, with no extra conditions.
The New Zealander, the franc, at the bottom. No trading ideas here. Only if it breaks this year's low, place a grid of limit sell orders with a 500-point step. The Australian, the New Zealander, has definitely stopped growing. The quotes have stalled. For those who haven't been building short positions above this year's highs, you can do so now. Set limit orders with a 500-point step. For those who have already built positions, wait for the average prices or a test of 1.11720 with a profitable euro exit. The franc bounced back beautifully. Let me remind you, in my opinion, the franc's devaluation is already visible through many instruments, through dollar franc, euro franc, and so on. And I think it has already started. So your task is to use pullback levels to jump into a very big trend on the franc that is already taking shape. It has already begun. I believe this is being done by insiders who know what the Swiss National Bank will do. As for euro, Australian dollar, it's in a range. I'm interested in the upper boundaries for building up short positions. For now, this instrument doesn't interest me.
We also have a great offer. Fund your account and get a 30% tradable bonus. Trade with additional capital and expand your opportunities with Forex.
The euro is growing, and if it breaks out, then a grid of limit sell orders from 500. Dollar ruble, pay attention, it has once again approached the psychological mark of 77, which we've already hit for the third time. As I mentioned before, we have another bearish breakdown. On a pullback, you can sell with the goal of breaking through this level and updating the yearly lows on this instrument. That's all. Trade with Forex, subscribe to the channel, and stay tuned for new reviews.